What we found amazing is that the last few times you've been on the podcast, you've been 100% correct. We had you on and you talked about buying into the S&P 500. You predicted the best time to buy, and since then it's been up 35%. You predicted the best time to buy Robinhood, and since then it's been up over 200%. You predicted it was the best time to buy energy stocks before they went up. Since then, those are up 1 to 200%. And you predicted AI and robotics over the last year and have also been correct. It also seems like every time we film with you, the market's going down. You give us some insights, and then we look back 6 months later, and we're like, oh my gosh, he was completely correct. It's a lot of pressure for you. So what's going on today?
Yes, same exact thing, just different, slightly different storyline each time, right? So we have this boom bust sentiment cycle around AI. I think primarily because people just don't really understand AI. Like, it's just big, huge, scary thing. And so many people are talking about it being a bubble, right? And for investors, the market's gone up quite a bit. So it doesn't take a lot to shake it. Remember back during DeepSeek, DeepSeek was going to completely bust up the entire AI economics model, right? AI was over because of DeepSeek. I think we lost something like $1 trillion of value because of a misunderstanding of how models work. DeepSeek ended up being a reasoning model. And shortly after, people realized that reasoning models take like 100 to 1,000x the amount of inference to actually use. So, even if you are able to come up with a model cheaper, the amount of compute necessary to actually utilize that model is massively more than anything we've ever seen, up to that date. So, the market just didn't understand it. And I think I see more of that happening today than ever before in my entire life investing, where investors are just not willing to go deep and gain conviction, like actually do the hard work it takes to get conviction so that when things like this happen, they don't get freaked out.
But do you think anything could be different this time? Because the market was at an all-time high, and then on the fear and greed index, it hit extreme fear for the first time ever.
Yeah, you have two vastly different scenarios. Like when we had you on initially, and that was the first tariff scare, I asked, what should the average person do? And you said, get a second job, do everything you can to buy risk assets. You also said this is the dream scenario for every investor. And again, you couldn't have been more correct. This time, however, the market's hit an all-time high at the same time that the fear and greed index hit extreme fear. And you have these two convergences that just, we don't see the market doing well at the same time that people are very pessimistic.
Yeah, I mean, nobody can predict what the market's going to do over a short period of time. And that's not what we're really focused on, right? Like when I made that comment, it was like, I feel that people should be doing that for the next few years, not just the next few weeks. So like I said,
they would have been pretty well off though if they did it for the next few weeks.
Yeah, I mean, you just have to keep doing it. Like, guys, this is the biggest thing that we will likely ever see in our life. Period. End of story, right? Like, there's so much doom around this concept of AI, and it just drives me absolutely bonkers. Let's just talk about what people are freaking out about right now. Like right now, you probably saw the Michael Burry stuff, right? So right now, people are freaking out about the AI infrastructure companies being over leveraged and overbuilding and not doing proper accounting because the chips they're saying are going to last and be valuable for 5 or 6 years, when in reality, people like Michael Burry are saying they're only going to be valuable for 2 or 3 years, right? So he's saying once the world realizes that, the economic models are going to fall apart. They're overspending on things that won't generate enough value to generate a return for their cost, and that this will be similar to the mortgage crisis. Right? That he's seeding that in everyone's heads. So I'll say this, even if he's right, it doesn't matter. So even if this one cycle that we're in right now is maybe overspending on compute that isn't going to last as long as the companies say it's going to last in terms of being valuable and generating income, that doesn't matter to me, because that's just this one little mini cycle in the AI story. That's not changing the much more important, larger story, which is we're inventing intelligence. And over the next 20 to 40 years, we are going to make all of industry meaningfully more productive, meaningfully more efficient. And when that happens, everyone wins. When that happens, all companies become more profitable, right? Well, I don't want to use the word all, right? Like industry generally becomes more profitable. We're able to climb out of this kind of cycle of scarcity that we've been living in for so long, where more people will be able to get more things. That will start to accelerate. And if that happens, you have to be invested in productive assets, period. Like end of story. Like if you have conviction in what I just said, these bumps along the road, whether it's DeepSeek or whether it's AGI is going to take 15 years as opposed to 2 years, or this current generation of chips won't be as productive as people think they're going to be. That stuff really doesn't matter.
Okay, so you say that we're not able to predict the short term and we can predict the long term, but at the same time, you're also posting screenshots of your trading account on Schwab of like call options and like stuff that isn't super far out in expiration date. For those that don't know, a call option is basically you're predicting a price will go above a different price by a certain date. And that is kind of like predicting the short term. So how do you know when to like try to predict the short term with your call options? Or is that kind of, you just see that as a gamble? Because I see you making millions of dollars.
Well, they don't always work. This is a cycle that repeats itself over and over again. Like I said, it happened with DeepSeek. It happened with AGI maybe being further away than we thought it was. Now it's the compute. It's always going to be something else, but the cycles don't last that long. And I'm making bets that over the course of the next few months, that it will be a rinse and repeat. And these companies will recover, because the risk reward of not being invested in these companies is it's asymmetric, right? So could there be some downside? Yes, absolutely. But missing out on the upside of the biggest technological cycle that we've ever seen in the history of the world, right? It like that's an asymmetric risk. And I firmly believe that both institutional and retail investors will ultimately decide that they have to be part of that, and these stocks will recover.
So what happened to Michael Burry closing down his fund? Why did he do that?
Well, listen, Michael Burry seems to have conviction that we're in a bubble, that things have gotten overinflated, and maybe he's partially right. Maybe he's partially right. But he's a weird guy, first of all. Let's just like take a step back. Remember, he obsessed over the mortgage bubble for years and years, and he was really early. I think the difference between his historic call on the mortgage collapse and now is that the mortgage industry was somewhat insular. Like he found a problem that once exposed, theoretically, there is no way to get out of it. Whereas with this AI super cycle that we're in, and we're still in the very early innings, I'm not even sure we started the first inning. That's how early we are. There's so many factors, and it's so large that I think he's in over his skis with this one. Even if he's right about one piece of it, this is very different from the mortgage sector, right? Like this is the entire world innovating in a way that we've never seen it innovate before.
Part of it reminds me of Isaac Newton, his investing. Did you see this chart? It was early in on something and sold it for a really big profit. And his buddies got in a little higher than him, and it went up even more. And he says, I'm not touching that. That's too high. It keeps going up. And he says, no, I'm not doing that. It keeps going up even more. He says, you know what? Maybe I'm wrong, and maybe I should be investing. And then he buys, and it goes up even more. And he's like, oh, wow. Yeah, I'm glad I didn't miss out. And then the whole thing collapses, and it shows he sells at the bottom. Like he lost his whole fortune doing this.
I think the core issue is people overthink things. Right. So like we all have these phones in front of us. I think I've talked to you guys about this in the past. one of my biggest investments ever was on Apple, early days iPhone. When this phone came out, there were a million things to kind of talk the phone down, right? To say Apple's getting overinflated. When you experience an iPhone for the first time, when I've held an iPhone 1 in my hand, I was like, this is maybe bigger than anything that's ever happened in my life. And this will likely end up creating the biggest company we've ever seen. So it's like, that's all you need to know. Game over. Like, you don't need to worry about all the little things. Did he do this thing right? Is the connection good? Did he get a good deal with AT&T? That stuff is like nothing compared to the overreaching story that this is the most transformative piece of technology that has ever been invented in my lifetime and would completely restructure the way that we live our lives. And that the chokehold that Apple would have on all of us, right? It was just, it's hard to wrap your head around that and the financial opportunity for that company. So I think about AI right now and what's happening. It's so much larger than this moment. Like that, no, nothing worries me. No blip in the system worries me. No market correction worries me. They're all opportunities to me. Every single dip, every single market bump is just an opportunity for me.
When I checked my portfolio this morning, what is today, Thursday?
Mm-hmm.
Today's Thursday. It was a horrible day in the market. You guys can go back and probably see it since we're posting this in a couple of days. And I saw my portfolio down a bunch. I'm like freaking out a little bit. I'm like, oh, okay, how am I going to make this up? Okay, I got to make sure the podcast is good for this Sunday. I got to make the money back. Then you walk in and you were saying, oh yeah, this morning, like, I bought a little bit this morning too. And you bought some Bloom Energy. Graham asks like, oh, how much did you buy? And you're like, $1 million. Casually.
And then I'm thinking, okay, that's got to be,
$1 million.
Margin. Is that like, no, just $1 million.
But it's on margin, yes.
It is on margin.
So you pay for it on margin, but it's not leveraged Bloom Energy. It's not options.
I bought
Bloom Energy.
options
it's equity.
too, but yeah, I bought $1 million in equity.
So let's talk about this morning. When you open up your portfolio for the first time, how much were you down today?
A few $1 million.
And what was the internal dialogue? So if you have people watching right now where their portfolio is going up or it's going down, what do you tell yourself when you wake up and you see you're down a few $1 million?
Why? That's all I care about is the why. I don't care that the market went down. I care about why it went down. If there's new information, if there's something that I didn't know about yesterday that I need to learn about today that is a meaningful risk to my assets, then I want to know about that and I'll trade on that. And so I immediately try to figure out what's going on. It's the Michael Burry stuff. To some extent, it was SoftBank yesterday selling all of their NVIDIA, although they're just selling it because they have no cash and they need to make a $22 billion investment in OAI before the end of the year. So that didn't concern me. There's a few other little things, specifically on Bloom Energy. I contacted my Bloom Energy analyst, who's one of my best friends, and I said, hey, I don't see anything on Bloom Energy. Do you? I just want to make sure I'm not missing anything. And he's like, no, I don't either. So I just bought more. Again, if your thesis doesn't change and the market takes a downturn, that's an opportunity, right? Like as long as your thesis doesn't change, as long as the underlying information doesn't meaningfully change, it's just an opportunity.
But at what point do you get concerned? Let's just say everything drops by 50% for no real reason. It just drops. Couldn't consumer sentiment be a reason in itself that the market's going down and that becomes self-fulfilling and then more people start selling and more people start selling and more?
I mean, it doesn't concern me. It probably excites me more than anything else if that happens. If the reason for it happening is what you just laid out, which is sentiment and fear, that excites me. If the reason is because we found something out that totally disrupts the thesis that I've been working on for 3.5 years about AI, that's a problem. That's something I want to know about. So, no, guys, I've been through this. So I was a kid, but I lived through the 87 crash. My family was in, the finance sector. I was living in New York at the time. Like I've been through it in 2000, been through in 2008. I mean, this is to be expected. It's actually so weird if we don't have days like today. If we don't have days like today, that's what concerns me. I'm like, wait a second. is like the information that I know, have they already accepted that? Meaning there's no meaningful degree of information arbitrage between me and the rest of the world, right? I like it when people are coming out with concerns and fear and, the polar opposite kind of thesis as mine, as long as I believe mine is stronger.
But that assumes that the market is somewhat logical. And the market can be very irrational and very emotional.
Not in the long term.
Where does that play in? How long could the market be trading on emotions for before eventually logic comes in?
Logic will always win. Historically, the market trades off of emotions for very short periods of times, days, weeks, maybe months. Look at every market crash. Look at the recoveries on every market crash pretty much during our lifetime. It's very quick. So whenever it's a fear-based drop or just confusion, the market generally recovers very quickly.
Real talk for a second. If you're trying to grow on social media, short form content is literally digital gold. It has been one of the biggest drivers of success for the Iced Coffee Hour. We just take our best moments from the podcast and we can clip them up for TikTok, Instagram, YouTube, you name it.
But let's be honest, it takes a lot of time to do that properly. And that's why tools like our sponsor, Opus Clip, are a total game changer. For those unaware, Opus Clip isn't just a clipping tool anymore. It's a full-on AI-powered video editor built for creators. So incredible that it could automatically pull in your long-form YouTube videos, find the best moments, add captions, B-roll, and even schedule clips to post while you're away.
It's like having an entire editing team, but built by AI. Top creators like Jubilee and Darman are already using it, and we actually use it here on the Iced Coffee Hour. You see this clip Togi reacted to? It was made with Opus Clip.
And here's the best part. Everyone who signs up with our link gets 1 week for free, plus 50% off your first 3 months. All you have to do is go to opus.pro/icedcoffeehour or click the link down below in the description. Again, that is opus.pro/icedcoffeehour.
Seriously, guys, we cannot recommend it more. For what they deliver, it is extremely affordable. So if you want to get a bunch of content super fast, built by AI, I highly recommend Opus Clip. Thank you so much to Opus Clip for sponsoring this episode.